Our next session brings a change in pace for today's agenda. In quick succession, you will get to hear 4 pitches from leading fintech startup companies from our FinTech Demo Day. It's a chance to understand them better while getting a good overview of how the fintech industry is evolving rapidly. Moderated by Sandeep Malhotra, Executive Vice President of Products and Innovation Asia Pacific at Mastercard. The 4 companies featured are Juvo, hoolah, Moka AI and Panda Remit. Without further ado, let's hear from these leading fintech companies.
Hello everyone and welcome wherever you are in the world. My name is Neale and I have responsibility for Mastercard's Start Path programme, our startup engagement initiative which selects the boldest and brightest fintechs from across the globe, supporting them to scale with Mastercard technology, expertise and access, and partnering with them to uncover opportunities to co-innovate together. We are delighted to have been invited by Singh to contribute to day 4 of this incredible festival of all things fintech. Over the course of the day, we're bringing 3 sessions to the stage, all of them addressing the ways in which fintech is solving real problems that exist in the world. Fintech founders are typically mission-driven by nature, and given the cataclysmic changes that have affected so many in 2020, which in turn have seen an acceleration of fintech in use, our overarching banner for today is FinTech for Good. Our goal is to provide you with insights on critical fintech topics and also to introduce you to some of the best fintechs in the world addressing these issues. The first session focuses on the need for fintech to evolve and meet customers where they already are. Over the past decade, consumer empowerment has led to a drive for reduction in friction. And in turn, friction is meeting consumer needs in new ways. And with the embedding of financial services into experiences of all kinds, the result is that consumers' needs are being met in the moment. We at Mastercard carried out research in collaboration with PitchBook to understand where smart money is being invested in fintech. Venture capital has been directed at consumer-centric fintech businesses for a number of years, but in 2020, the record has been set for the amount of VC funding in the space. While deal numbers into consumer-oriented fintech have fallen back to 2018 levels this year, deal value in aggregate has risen to $4.9 billion in total invested by VCs between January and October this year. So what do we have in store for you today? In order to better serve the needs of customers, a host of fintech enablers are providing technology, but they're also understanding the art of the possible in helping others, including merchants, to build out new experiences. One such enabler is Indian fintech Razorpay. Razorpay is a Start Path partner that recently entered the Unicorn Club after raising $100 million and has been charting exponential growth since its inception. In just a moment, we will be joined by Shashank Kumar, co-founder of Razorpay, who will talk to Sandeep Malhotra, Mastercard's head of product in Asia Pacific. Shashank will share his experiences of building the business, but also his insights on what's to come. Through the Start Path programme, we've had the opportunity to work with a number of fintechs that are solving customer pain points in novel ways. So after we hear from Sandeep and Shashank, we will introduce you to 4 such companies: Moka AI from Canada, hoolah from Singapore, Panda Remit from Hong Kong, and Juvo from US and Brazil. Each of these 3 companies will present to you, and you'll then have the opportunity to meet them in the Start Path booth after the session, where you can also find out more about our FinTech programme. For those of you who have joined but are a little less familiar about Start Path, let me share a short video to provide you with more detail, after which Sandeep will take the reins and host Shashank in a fireside chat.
Hello and welcome everyone from a near-perfect Singapore. I'm so delighted to be here today at the Start Path event where I'm going to tell you about the different areas where fintechs are spearheading all around the world. So what is the topic of this session? Meeting customers where they are. What does that mean? Today, fintechs are solving for meeting customer needs with embedding financial services in experiences. It doesn't only serve the needs of the existing customers, but it actually brings new people into the digital economy. So to get real insights into this, we've invited a leader from one of the most successful fintech in India. I would like to welcome Shashank Kumar, who's the co-founder and CTO of Razorpay. Now, keep me honest here, Shashank, but right from the very beginning, Razorpay always focused on meeting merchants and increasing their ability to accept digital payments. Could you tell us about how you found and how you met this target customer?
Hey, Sandeep, thanks for the kind words and thanks for the invitation to speak. I think the firm Razorpay itself was founded about 5-6 years ago in 2015 when we started operating. And from day one, we have been interacting with customers very deeply. And to talk about like where we have discovered our very first customers who went live on the platform, I think we have been fortunate that we started working out of a co-working space where we had our first office, just a two-seater office that we had in the co-working space, and we interacted a lot with startups and companies in that area, in that locality, to kind of just get a sense of how founders and entrepreneurs go about their daily lives, go about their jobs, and try and understand what are the top problems that they have in their minds. And I would say that is where kind of our own interactions began with the industry, with the ecosystem at large. I think because before that, we kind of didn't have any background in startups and in entrepreneurship. But that, I think, acted as a crash course of how the startup world kind of looks like. And we built a lot of long-term relationships in that co-working space. And this was back in Jaipur, by the way. This was not a tier 1 city like Bangalore or Delhi. This is a tier 2 city, that is Jaipur, where the startup ecosystem actually hadn't permeated that much at that point of time. But even then, we can observe a lot of local entrepreneurial spirit from, in general, that is the local startup industry or local small businesses, and a different variety of businesses that kind of happen on a daily basis, which are not visible to us in the media or in the newspapers, but they are the backbone of the economy and support a lot of the day-to-day stuff that is kind of keeps going on.
That's very impressive, very impressive. But how do you create a product, right? When it came to this customer, how do you define your first product? That's a very hard one. I mean, I run product. I really struggle with that. How do you do that? How did you do that?
I think there are various ways for that. I think the best one, in my opinion, that I feel has worked well for a lot of founders that I have met, is to sort of figure out a problem that you yourself have faced, and you see that your peers in the ecosystem are kind of facing regularly. So when we started, we were actually building a crowdfunding platform for India, so to kind of galvanize the donation economy, galvanize the support that the people need to give to their local NGOs and other platforms. But as part of that is when we discovered the payments problem in the country, and we saw that most of the incumbents are very much focused on enterprises and large businesses, but at the same time, a lot of SMEs are coming online, and digitization is going on, and internet penetration is increasing, and with all these trends converging big time, even then, startups and the SMEs don't have a great platform for accepting payments. And if you go online back in 2014-15, you would see a barrage of negative reviews and problems that these businesses face and entrepreneurs face to kind of just accept payments in a very simple fashion. And that's where we discovered this problem. And when we talked to our first initial customers in the co-working space, it was an instant hit, because at that point of time, going live online and accepting payments used to be like a few months long process. And even after that, you had to go through a lot of pains to accept your first transaction. And and that is where, in fact, our insights came, and we were the first ones to launch a fully online, fully digital onboarding platform in the country, and to take, help businesses start accepting payments. So that just gave us a window of opportunity. We didn't know how big it can be. We didn't know, what kind of, how much of the problem we are solving. But it gave us a view that this problem is real. It's faced by a lot of businesses, and we are well suited to provide a solution for it.
So keep it simple, right? And solve for the basic needs. So if we look beyond, what you did first, and then in the changing environment. So if you look at customer also change, right? So when you started the company 6 years ago, India was just started, this whole digital payment revolution was just the beginning. And now, if you look at 6 years later, there's huge acceleration, and more so than ever before in this year. How did you deal with this customer who keeps on changing and the environment which keeps on changing? I really struggled with that.
No, actually, that's been one of the amazing things about India and the country, that we go through so many innovation cycles and business cycles constantly, and the ecosystem keeps changing, the regulation keeps changing, the customer persona keeps changing. But to my mind, and for us, that actually becomes more of an advantage because we pride ourselves as an organization to be fundamentally very agile and being on top of the latest innovations that are happening. And to talk about that, let me give you a view. When we started, we were very much SME focused, and we were building solutions towards that. But we saw a lot of pull from the market from mid-scale companies and large-scale companies who started asking for the solutions that we are building, because they felt that there are a lot of challenges, especially complex challenges around money movement, that they are not getting the adequate support from the ecosystem, and saw us as the right partner to kind of bring those to market. And that is what helped us keep transforming ourselves. So, from a typical company which is serving SMEs and startups, to also start serving, mid-stage enterprises, and later tech-first enterprises. And I distinctly remember, 2017-18 was the year when we started serving a lot of large-scale tech enterprises as well. And in last year, that is 2019 and onwards, we have even gone beyond and started serving a lot of traditional enterprises which are not tech-first and which may or may not even have a technical team in-house, but definitely don't want to be left behind in the digital revolution that is happening. I think few things that have helped us is that we've always at every stage taken a call as to what kind of customer we want to serve. Say yes to few and say no to everyone else, so that we have the right focus. And at after every 3-4 months, after every year, we kind of evaluate and take a call. How do we want to expand our product portfolio and also our customer portfolio, so that we are reasonably not being behind as well in terms of where the market is going towards, right? And I'll give you an example. With the pandemic happening, we are seeing tremendous rise in terms of the SMEs coming online, and we are doing a lot of sessions with them, be it events, be it partnering with them with their respective forums, kind of just understand what the businesses are feeling, giving them a lot of assurance, also thinking through and solving their problems. At the same time, we are also going to new industries, let's say like FMCG and hospitals, which had very well-established supply chains or payment practices, but those have been, as we know, been upended by the pandemic. And these companies are also taking this as an opportunity to take a step back and rethink their patterns, their supply chains, their payment infrastructure, to build it for the next decade. And that is where we are providing a lot of consultancy and support and product know-how to help them understand where the ecosystem is moving towards and gear them up for the next decade. That's
brilliant. Hats off to you. Now, if we look future, right? Future is always unpredictable, but there is not a surprise that the pandemic has created behavioral shifts amongst the customers and the merchant community, and some of them are going to be permanent in nature. Obviously, there are opportunities and challenges which have also come along the way. What are one or two challenges or obstacles do you see that the pandemic has brought to the FinTech and the financial services industry? And what would you suggest? How should they tackle that?
So, every ecosystem change, right? Can be very disrupting for businesses, right? For in general, for the larger community and for fintech ecosystem as well. But I see fundamentally that the momentum that was there towards digital transformation, that was already happening, that was already gathering pace, and this whole pandemic has given a huge boost to it, and the whole offline to online movement, and the whole trend is getting compressed and accelerated further, and we are seeing that shift. What we were thinking would happen over a period of 2-3 years has started happening in less than a quarter or two, right? And when that happens, right, for the fintech community in general, I think they have to figure out and take the right bets, take the right challenges that they want to serve the businesses for, because there's tremendous opportunity that exists out there, and we are seeing new trends coming up, new trends. To give you examples, we know that there are a lot of businesses in tier 1 cities in India which are adopting a lot of digital tools, right? But even in tier 2, tier 3 cities and beyond, there are millions of SMEs, who have challenges around, let's say, around payments, around payroll, around taxation and compliance, and each of these problems need to be solved digitally. If I take a far out view, right, let's say 5 years from now, or even 10 years from now, 10 years from now, every business that exists in India and in broader subcontinent as well will be digital. There is absolutely no doubt about it, right? They will file their taxes digitally, they will do their payroll digitally, they will deal with their vendors digitally. So then the only question becomes at this point is who are the companies or who are the players who will be providing those digital rails and accelerating that trend that is there, right? And for the fintech community, this cannot be any other better time than this, because whatever sector you are in, right, whatever product you are building, if you are tackling towards a 10-year change that is happening, and if you are able to accelerate that change, then I think you will be in a very good position.
I call it survival of the fastest. Thank you. So my last, category of question is mostly around funding and partnership. Now, as you've seen that the funding landscape has dramatically changed in the fintech industry, your last investment round actually put you into a unicorn status, so congratulations for that. At the same time, I think the investor community is realizing the importance of the fintech community in terms of solving for experiencing, meeting customer needs. What advice would you give to the new fintechs who basically are looking to expand and scale in a fairly rapid fashion? Would you share any of your experiences working with us, working with others, in terms of how do you expand and scale rapidly?
Yeah, absolutely. See, I think most of the fintech companies have to really solve for customer problems and really build something that people want, and is helping them solve a problem that can scale nationally or worldwide. That is there. Once you have done that, because that actually is very critical to say that you are meeting a core customer need, and then you need to kind of go for fundraising for fueling your expansion. That is there, right? And that is where I think the initial steps that we took, our partnership with Mastercard, especially to the Start Path program, and our investment from Tiger Global and Matrix Partner really helped us. The brand that the Mastercard has, and we have to work together with a lot of banks and regulatory institutions in the country, and us being young founders and India being the ecosystem that it is, just having that brand actually helped a lot, and given us I would say like a veneer of seriousness, without which I think probably like opening all those doors would have been extremely difficult. That is there, right? I think beyond that, at this stage, a lot of fundraising and investments happen not just on the on what you're doing, but what is the larger problem that you're solving for? What is the ecosystem shift that you're kind of trying to bring? And I think a lot of entrepreneurs focus a lot more when they're fundraising, on what is working well for them in some sense, and what are the numbers are, which I think at a point of, let's say, Series C, Series D, and beyond, it's kind of table stakes and absolutely need to be there. but you need to really nail down like what is the problem or the broader ecosystem shift that you are trying to solve for, and you are trying to work towards. That will really set you on the path for fast expansion, even from that point and beyond. And I think the core philosophy that that we have at Razorpay, the company that we are building towards for next 5 years, is that we want to build like a new age finance cloud for businesses in India, where we want to serve all kinds of financial problems for them, be it from payments, payouts, payroll, to any kind of banking support product that they need, and also transform the banking industry from the traditional relationship-based mode that we are in towards the new mobile-first, cloud-first world, where the entrepreneurs want all kind of financial information at their fingertips to make decisions in real time, rather than waiting for their teams to kind of give them their reams of information by the time it is already stale, and also ensure that any of the financial processes that businesses have in-house, they are digital, you're tracking it well, and that those data that you're generating inside the business can be leveraged to fast track your growth for any kind of support that you can get on top of that. I think a lot of data points that businesses generate just via the day-to-day operations are far more valuable that I think most of the entrepreneurs themselves don't realize the value of. But over time, as it accumulates, it brings a great profile, and it helps in all kind of operations. Be it from a compliance posture, taxation posture, or be it for you to get funding or a credit for any kind of growth that you need to fuel. And we want to ensure that businesses in India have that message, to understand that part, and we are doing our part in helping every last business, be it tier 1 city or tier 3 city or rural area, become digital and leverage the modern tools that we have at our disposal.
Awesome. Well, you built a fabulous business. We wish you more success and a continued partnership. Thank you, Shashank, for joining us. I would now hand this session over to Ling from the StartPath team, who's going to introduce you to 3 fintechs who are working on meeting customer needs in new ways. Over to you, Lily.
Thanks, Sandeep.
Fantastic. Thank you, Sandeep and Shashank, for the wonderful fireside chat, and good day, everyone. Now, my name is Lily, and I'm Mastercard StartPath lead in Asia Pacific. Today, we have 4 of our very best StartPath 2020 cohort who are meeting customers on their needs. They are based in different continents, but serving customers globally with their solutions. So the format of these sessions that we're going to have is going to be a 3 minutes pitch presentations, followed by a 2 minutes questions. So do pop your questions in the panel, and the founders will address it after the pitch. Now, to kick off, we have Moka. I would like to invite Barrar from Moka to share with you how his company is helping consumers improve their financial health and has become the #1 investing app in Canada. So let's welcome Phil onto the stage. Over to you, Phil.
Hi, my name is Barrar, the founder and CEO of Moka. Millennials have major money problems. 1 in 2 have less than $1,000 in savings, and consumer debt levels are an all-time high. As the world enters into a period of financial uncertainty, this problem is only compounding and impacting more and more people. As many of us are now stuck at home and navigating new financial challenges, it's more important than ever to meet consumers where they are. Our company was founded on a social mission to help people achieve their financial goals through more affordable and accessible technology. Currently available in Canada and Europe, the Moka app allows you to automatically round up your purchases made on existing credit and debit cards to the nearest dollar and invest the spare change into a fully managed, diversified portfolio of ETFs. Our users can effortlessly save $1,000 in the first year and have access to tax-preferred accounts as well as social responsible investing. But saving and investing is just the beginning. Everyone loves the feeling of finding money on the street, in the pocket of a winter coat, or even in the washer machine. We wanted to build a product that made users feel the same way. That's exactly what Moka 360 does. Here's how it works. Moka 360 lowers your monthly bills for your existing cell phone, internet, and other utilities by negotiating directly with your provider. We'll never lock our users into a new plan, and they can get the same or improved service at a better deal. We help our users save on average $250 per bill per year, and our biggest savings to date was over $1,200. Moka 360 also empowers our users to choose a smarter way to become debt-free faster. Users can visualize their debt in one spot, create a repayment plan, and automate that debt, saving them hundreds on interest. And finally, Moka 360 gives users access to real-time financial coaching through text message. answering a wide range of personalized questions. It's on-demand, data-driven, agnostic financial advice directly at your fingertips. Our revenue model is a simple software as a service offering. For our saving and investing services, we charge a low, transparent, flat $3 per month, regardless of a user's assets under management. And for Moka 360, our offering is risk-free at $15 a month with a 200% money-back guarantee. If you don't save $180 in your first year, we'll put $360 back into your account. We're targeting a segment of the millennial population that's otherwise ignored by many of our competitors. Many of our users are saving and investing, often for the first time in their lives. And we've proven we can acquire customers at a fraction of the cost of anyone in the market. With a less than 6-month payback period and an annual growth rate of 3x, we have the metrics to be able to back it. We're on track to reach 2.5 million users and 100 million in annual revenue through continued international expansion, partnerships, and raising our next round of capital in early 2021. If you'd like to talk about how we can work together, please reach out to phil@moka.ai. I look forward to answering your questions that you may have and hope that you'll join us in our mission of financial inclusion by providing millions of people around the world with better access to fintech products that help them save money, build wealth, manage their debt, and achieve their financial goals. Thank you. If you'd like to talk about how we can work together, please reach out to phil@moka.ai. I look forward to answering any questions that you may have and hope that you will join us in our mission of financial inclusion by providing millions of people with better access to fintech products that help them save money, build wealth, manage their debt, and ultimately achieve their financial goals. Thank you.
Hey, welcome, Phil, and thank you so much for staying late for this session over here. Now, I do have some questions that have actually popped up. So the first question that I have is, how has your product adapted to meet consumer needs during the pandemic?
Hey, Lily, that's a great question. So our core product was one that would allow users to round up their purchases and invest the spare change, which has worked really, really well, essentially allowing people to put money from their wallet directly over into an investment account without actually feeling the money leave their wallet. But when you think about an upcoming pandemic and financial recession, unemployment, there are best practices you should be doing in the best of times, but are ultimately necessary during the worst of times. So if you think about some of these best practices, negotiating your bills, renegotiating down your debt and having a good handle on your debt, even getting cash back on your everyday spending, those are important things to be able to do. So like our 360 product that we launched, I think I said in the video that was filmed just last week, we saved over $1,200. We've actually saved over $3,000 for one of our users. So it's great practices.
Fantastic. So someone actually caught your path to 100 million in revenue. So how do you plan to grow from where you are today to achieve this goal? Would you be able to tell us more?
Yeah, absolutely. So we talked about the international expansion as part of that just a second ago here. But if you think about it, it's 2.5 million users paying just over $3 each, right? And for us, 2.5 million users is not very far reach. We're going to achieve that increase in user base by international expansion. We recently launched in Europe through an acquisition of an asset management firm over the Netherlands. We're really excited to continue global expansion for this fintech product. And then you're increasing your MRPU, so your monthly revenue per user. Our 360 product is a great example of that as well.
I'm waiting for you to come over to Asia Pacific.
We're really excited for that as well.
Fantastic. I do have a last question for you. That's very much, it's like, so we talk about the expansion to Asia Pacific. So how do you plan about expanding into different markets?
Yeah, that's a great question. So for us, it's a matter of how does our product adapt to the local market? So you need to have a technology stack that works well with existing banking infrastructure. If you take a look at the African market, for example, they went directly from a cash economy to a mobile economy and they skipped that traditional banking infrastructure. We're really excited about Asia Pacific because we think that there's an infrastructure that works well with our existing product offering. So it wouldn't be a far departure from where we are today. Doing the right customer discovery, localization is extremely important. We would probably enter the regulated space through an acquisition the way that we did in the Canadian European space, so acquire the expertise locally to be able to enter the market and then be able to offer that product. So it's something that I think it's about localization, open banking, being able to meet the regulation to the extent that it needs, and ultimately doing that customer discovery and make sure that our product offering meets the needs and adapting the product where it needs to.
Right. I know it's late in your night, so I'm not going to hold you up too much. So thank you so much and excellent answers to the questions. Next, I'm going to move on to hoolah. Thank you so much, Bill. Next, we're going to move on to hoolah. We all know that buy now, pay later is the new consumer trend in Asia Pacific. Now, hence, my next company is in this space and has expanded to Singapore, Malaysia, Hong Kong, and moving on to Thailand and all over Southeast Asia. So let's welcome Arvin Singh, the co-founder and COO of hoolah, to share more about your solutions and the plans in Asia. Over to you, Arvin.
Hi, everyone. Thank you for joining our presentation today. My name is Arvin Singh, and I'm the co-founder and COO of hoolah. hoolah is Asia's leading buy now, pay later business, and we create mutual value for merchants and shoppers through responsible affordability. The problems faced by merchants are around 4 key areas. One is traffic, stimulating demand without resorting to heavy discounting activities. 2 is conversion, getting more customers through the checkout flow in an optimal manner. The 3rd is basket size, helping customers buy the optimal basket of goods. And 4th, loyalty, getting repeat customers without heavy spending. hoolah solves these problems in both online and in-store retail environments with our comprehensive buy now, pay later solution. We've seen a 700% transaction growth and 350% GMV growth so far in 2020 without factoring in 11/11 or Black Friday results as of yet. In 2018, we secured our seed round of funding, and earlier this year, we raised an 8-figure sum for Series A. We've also had hundreds of new merchant partners join us, rapidly adding to the list of global and regional brands that we work with. I'd like to share a quick view on both our online and in-store solutions. For online, it's fully integrated into the merchant's existing flows, seamless, easy to use, and promotes conversion. In-store, customers use the hoolah app to scan the merchant QR code, something that they're very familiar with today. Both online and in-store orders are actually accessible through the hoolah app, giving customers an omni-channel experience. While we deliver an exceptional experience through our customer and merchant-facing products, the true magic lies in our dynamic back-end technology. This delivers 2 pieces of competitive advantage for us. 1, the flexible and dynamic nature allows us to rapidly scale into new markets. And 2, a proprietary risk and decision engine helps optimize our acceptance rates while managing any nefarious behavior, all without relying on any third-party data. The regional opportunities ahead of us are enormous. We've already delivered in multiple markets and are rapidly expanding across the APAC region. As retail recovers and e-commerce continues to surge, we've seen a growing demand for hoolah, and we're excited to bring our solution to these new markets. We started with a bold statement to deliver mutual value, and that means bringing an exceptional experience to drive affordability for our shoppers while delivering real business outcomes for our merchants. Over the last couple of years, you can clearly see the impact that we've had on these merchants, and we'll continue working closely with them to further support their growth. Thank you so much for taking the time to learn a bit about hoolah.
Fantastic. You do have a lot of the brands that I like. So I do have a quick question for you, Arvin. So the first question that I have is there any risk to these merchants? Some of my favorite brands there.
It's a really good question, Lily. Absolutely not. There's no risk on the merchant side. We pay the merchant partner upfront for every product sold, and we take on all of that risk on their behalf. So they're really not liable for anything, and their cash flow remains unimpacted. So they're making that investment in a one-time transaction fee for every successful purchase with hoolah. But in the end of the day, we take on all of that risk subsequently.
So we asked a bit about the merchants, the risk on merchant side. I would also like to ask you, how do you safeguard consumers or customers to discourage or prevent multiple impulse buying or buying beyond their means to pay back later? That sounds like me.
We've got a comprehensive plan around that requires a few different activities from the hoolah side. So the first is education. We've invested a lot in educating our customers, and we're producing a lot more content at this point just to promote financial responsibility. Our recent blog post on simple ways to take control of your budget was actually one of our most popular posts to date, and we'll be doing a lot more in that space. Of course, we pride ourselves on transparency, which helps customers as well. No hidden fees, no processing fees, no interest. And you could even take a payment early without any cost to that as well. But I think the thing that we proactively built to support this is that proprietary risk engine that was mentioned in the video. We take an active measure to ensure that customers don't overuse the platform. And there are certain caps in place at the back of the purchase so that when they do hit that point, we'll step in and proactively let them know through our communication that, hey, we'd like you to pay off some of the outstanding payments first before you continue to enjoy hoolah.
Fantastic. I do have one last question. I think this is very much into the space of, with so many BNPL solutions that are out there. So, how does it differ from the other service providers in the same space?
It's a really good question. And we have seen some BNPLs, for example, promoting for customers to spend beyond their means. And that's never been within our philosophy or vision as a business. We've taken a stance on responsible affordability. It's in our vision. It's always been the intention of our strategy from day one. We want to allow customers to make that investment into a quality product and get the lifestyle they aspire to, but at the same time, ensure that they don't fall into debt. So similar to that view on education, the transparency, and that safeguard controls that we have in place, we think that our philosophy as a business is what's right to drive this. And our business model is built that way as well. We're not really incentivized on building a business around late fees. So ourselves and the shoppers are actually in the same boat when it comes to our goals, and we don't want them getting into that spiral.
Right. That's a great philosophy to actually adhere to. So this is great. Thank you so much, Arvin, for this session. So I'll see you back in the microsite later. And next, we actually have Panda Remit. Now, Panda is actually building a global financial platform where money is borderless, allowing for safe, convenient, low-cost transfer. So I do have Ken Zheng, the founder and the CEO of Panda Remit. Let's welcome Ken.
Hello, my name is Ken Zheng. I'm the founder and CEO of NextPls. Here I could give you a quick introduction of the company. Our company was formed in July 2018. I've been working in the financial industry for the entire of my career. At that time, we really saw something we could build in terms of building a global financial platform where money can be truly without borders. As of today, we're operating in 28 countries, including Australia, New Zealand, Singapore, Japan, and 23 other European countries. As we continue to expand, we have about a total of 63 employees and reach an investment of $13.9 million from reputable investors such as Sequoia and Lightspeed. Our first product that we have built operates under the Panda Remit brand. Essentially, is a cross-border remittance product to allow users from across the world to send funds to China at a fraction of cost at a real time. Typically, sending money to China has always been difficult due to very stringent regulatory requirements, as well as banks in China are very difficult to work with. We have built direct API connection with banks in China to allow instant disbursement to all banks, 500 plus, at a real time. When we first built this product, we really thought what value we need to bring to our customers. Typically, if you look at the World Bank's price index, remittance, cross-border remittance has been extremely difficult, as well as costly. The typical price for an average transaction to send funds to China has been 7 to 8% of principal. Our price from a fees perspective is 90% cheaper versus our competitors such as banks or other remittance companies. Also, from an FX perspective, we're extremely competitive. From a user experience standpoint, we have enjoyed a very high success rate. Almost 99.9% of our transactions are dispersed real-time to our customers. Further, we were able to complete real-time KYC for both sender and receiver, as well as also all the regulatory filings with regulatory body at a real time to allow us to send funds to the banks instantaneously. Customers really love and enjoy our product due to the speed, price, and convenience. If you look at our product, the Panda Remit product was launched about a year and a half ago. We have been growing on a volume perspective over 100% quarter-to-quarter basis. Further, customers really recommend our product to their family and loved ones. Over 60% of our customers come from word of mouth or organic growth. Our long-term retention rate is significantly better versus our competitors, over 40%. As we continue this journey, we look to enhance our product to build other features, such as multi-currency account, card payment, and other capabilities. We look to continue to drive on this journey and work with you every step of the way. Thank you for your time.
Thank you, Ken. That's a great presentation over there. Now, the questions for you is twofold. One is there a slowdown on the remittance needs during the pandemic? Now, or how has your company actually handled the challenge of 2020?
Thanks for the question, Lily. So a couple of things, right? So obviously the pandemic played a significant role with our customers. Initially, when we saw it, overall, there's a slowdown in terms of jobs, in terms of activity. But what we saw was an increase in terms of people adapting to more online type of capability. So instead of going to the local cash stores or banks, people are more in tune to use these mobile devices to send funds to their loved ones back home. So we do see a continued growth in terms of volume. From a company perspective, I think for us, when the pandemic first started to hit early this year, we really was not unsure of what's going to happen. A lot of our employees were sort of a lot of uncertainties. And as a company, because we at that time, it's a very young company, a little over a year, we had to make sure we don't rely all on investors' money. So we, on a long-term perspective, we want to make sure that we are generating profit in every one of our markets that we operate in. So by end of Q2, we were happy to say we were generating a positive revenue in terms of unit economics for each one of our markets. I think that's one of the key things that we change.
Right, got it. So where do you see pandemic remits in the near future, given that the growth is actually so tremendous?
Yeah, so obviously we look to expand to different markets. So by the end of this year, we will be launching almost all the developing countries, including the Australia, New Zealand. Also, we're adding to US and Canada, as well as Korea to our list. But also we'll be adding other product capabilities in terms of not just remittance to China, but across the world. But also, more importantly, I think I mentioned in the video that we'll be including other type of activities, such as other banking-related services, digital banking type-related services, with the help of Mastercard, of course. We're very excited about doing that. So stay tuned.
So I'm excited about it. So really waiting to see the new product and the new roadmaps that you actually have. And now, thank you so much, Ken. So now I'm going to move on to the next and the last company that I have. So the last I have is actually Juvo. Juvo is the financial identity as a service platform, analyzes mobile network data to build alternative credit identities that open a new world of financial opportunities for underbanked consumers. So let's welcome Steve Polsky, the founder and the CEO of Juvo, to tell us more. Over to you.
Hello, I'm Steve Polsky, founder and CEO of Juvo. And on behalf of the Juvo team, we're delighted to join you here during StartPass Summit at the Singapore FinTech Festival. At Juvo, our goal is to enable hundreds of millions of consumers to build a financial profile and gain access to basic financial services via their everyday usage of their prepaid mobile phone. Billions of people are caught in what we call the credit conundrum, a cycle where they can't get credit because banks don't trust them, and banks don't trust them because they don't have established credit. In fact, 68% of the world's population is lacking a formal credit score. That's over 4 billion consumers who are underbanked and unable to fully participate in today's digital economy. And yet nearly everyone has a mobile phone, over 83% of the population, 3/4 of which are prepaid. At Juvo, our goal as a company is helping to solve this problem, meeting people where they are and using the tools they are most familiar with, their mobile phones. We call this the yes economy, enabling banks and financial institutions to provide services to a new base of consumers by creating a data source, financial identities, that enables them to make better decisions and say yes instead of no to more consumers. Juvo bridges the world between mobile operators who reach most of the world's population and financial institutions. For mobile operators, our solutions enable them to better serve their large base of prepaid mobile customers, increasing revenues and reducing churn. This also enables us to build financial identities on a large portion of the population, which creates a new data source for financial institutions, providing them visibility into a population where previously they had little to no information. Here's how it works. Consumers start as beginners and graduate to bronze, silver, gold, and on to diamond through their mobile usage. Juvo provides progressively larger credit extensions for the usage of their phone. 2 days, a week, 2 weeks, a month as consumers advance. Without saying the words loan, credit score, or bank, consumers are effectively building their credit, graduating from beginner up to diamond, each step unlocking additional capabilities. Said another way, we're effectively enabling 4 billion prepaid consumers who are largely invisible to build their individual financial profiles. And once they've done that and have graduated, we move upstream to unlock additional financial services. To date, we've built close to 300 million financial identities across 26 countries and have enabled over 1 billion in transactions. We're backed by leading Silicon Valley VCs and leaders in the mobile and financial services ecosystem. Partnering with Mastercard enables us to accelerate our vision in working with financial services providers, offering consumer credit, credit cards, and other services through the use of alternative data, enabling a wave of new consumers to join the digital economy, the yes economy. Thank you.
Thank you, Steve. So the first questions that I have coming from Juvo is that, how do you actually complement in terms of your offerings? How do you complement traditional credit scores that are available to the banks and the fintechs in the various markets?
First of all, as I was saying, a huge number of consumers are outside of traditional credit bureaus. And in the pandemic, where it's accelerating a new wave of consumers coming online, another 1 billion consumers. And many of these are thin file or outside of credit bureaus. But even for those in the credit bureaus, we have found that our scores are incredibly complementary and allow companies to differentiate. They add a lot of value and differentiate consumers based on good payers, loyal payers, all of that.
Right, fantastic. So can you actually touch on some of the use cases outside of traditional credits?
Sure. Yeah. I mean, a natural use case is around credit scoring, but we found that really in almost any digital environment where companies are onboarding a new wave of consumers, this is valuable information. Who is a high paying customer? Who's a loyal paying customer? Eliminating fraud. Any cases where there's just an unknown consumer. So for instance, gig economy companies, think riders and drivers. Food delivery companies, understanding new customers. E-commerce players, understanding consumers who come on board for the first time and understanding offers and how to treat new consumers. So a wide variety of use cases.
Right. Very nice. I do have the last question is that how do you typically work with companies or fintechs who have better or sophisticated data teams, versus to those who have not?
Sure. So we broadly serve two different types of customers. Those who are just looking for an answer, want to know about a consumer, and then others who they have a full data team. And the second is one we love to work with, where we provide a whole set of indicators, the API that they consume and use to build into their models and their scoring.
Right. Thank you so much, and Steve, for the excellent answers. Really well appreciated, especially now it's late in your time too. So thank you. I see you in that microsite later.
Thank you.
Right. With this, I've come to a close of this session. Now, do note that the companies and some of the SubPath members will be in the SubPath microsites for a 30 minutes networking session. So do come over and join us for the more conversations. Thank you once again, and all the best.
You've just heard 4 promising fintech startups with presentations explaining what their tech products are all about and describing their journeys to date. Those were the FinTech Demo Day pitches.